Good morning and welcome to this weekly market update. Today is the 1st of May. For any new followers, basically what I'll be doing is going through price action. It's a technical analysis using fibs, channels, trend lines, but basically just to give some sort of weekly outlook for this week and maybe for the next week as well. On the charts you'll see 3 moving averages. The red one is the 55 simple moving average, the purple is 100 simple moving average, and the gold is the 200 simple moving average. Won't be giving any trade calls or recommendations in this. So what I'm going to do is I'm going to go for euro dollar today, cable, dollar yen, Aussie dollar US, and gold. If there's any other charts that you want to look at in future, then I will be posting this on the AGM Markets YouTube channel, so feel free to comment beneath the videos or on Twitter as well, on our AGM Markets Twitter feed, if there's any sort of videos or anything else that you want me to do on these videos to help your trading out. Okay, so let's start then with euro dollar. So what we have here, this is the weekly chart. And as you can see here on the weekly context, we have this kind of downtrend that we're still in at the minute, and we also have the downtrend bottom that we're still in as well. So it's still kind of consolidating between this range, but in terms of a shorter term view, we've been looking at this recent fib, okay, and that is from here to here. As you can see, this fib has been reacting very nicely to this 50% level, and that's what we've been talking about for the last sort of few months, few weeks. And we've been saying that our bias is still towards the upside unless we get any weekly close below this fib level. And as you can see, we haven't. In the last couple of weeks, been very bullish. We spoke about this candle here. I'll just highlight that for you. This candle here was very bullish indeed. Perfect. I mean, the amount of times we've pierced below this 50% level has just been ridiculous. 3, 4, 5, 6, 7 times now. And this 7th candle here, where we pierced below, well, first of all we had the candle open pretty much on the just above the 50% line, and it pierced below, and we had a lovely bullish close, a good few hundred, well, good sort of couple hundred pips above this 50% level, and we can now see that we're starting to rally. Last week's candle was a nice continuation pattern, a nice long lower wick, and a standard sort of bullish candle with not a lot of upper wick. And you can now see, today's Tuesday, already starting to see the market going up a bit. I mean, not massively convincing, but it's trickling up there nicely. So we have to say, in terms of this weekly outlook, weekly perspective, a longer term perspective, the bias is still towards the upside. We want to see some sort of test of this trend line. Obviously we're a long way away from that, but in terms of this week, the main resistance that I'm really interested in, the only on the weekly chart, the only sort of resistance you'd have to say would be these recent highs around here, which is 133.60. It has to break that in order to get to the 0% line at 1.3485, and then the first sort of moving average that we're looking at on the weekly is the 100 week moving average at 1.3534. Okay, if you're not sure why I've put this resistance line up in the first resistance, well, it's because of these recent candles around here. These ones here, these are the highs here, so that's where we've drawn that first resistance line. And you can also see there's a nice sort of support level around here as well, so nice little confidence zone there. But you can see it's already reacted as nice resistance. So I mean, you'd expect it to get broken, but in terms of the first sort of resistance on the charts on the weekly, that's the first one that you really have to look at in terms of the data, in terms of the weekly chart. Okay, so let's flip it to the daily chart now. And it's a very similar thing to the weekly, still leaving the same fib on. I mean, it's very clear price action there. If you can't understand this price action, then you're really in the wrong field. I mean, you can see there the amount of wicks that we've had pierce this 50% level, and it's bounced back up. Very, very clear action there that this level is holding very, very well. In terms of the moving averages on the daily, I mean, we had the 100 day was acting as a nice support. We broke above it, it came down, it bounced back up, and now we're above the 55 day. So in terms of the next moving average, it will be this 200 day moving average. That's if we get through that first resistance. We can see there as well, very nice resistance. It's much clearer on that daily chart how well that first area resistance handled itself. There's a nice area there, and that's why that's why I'd highly recommend keeping this level, this 133.60 level, you can call it, on your charts. In terms of the moving average, it's this 200 day moving average. What price is that at? That is at 1.3472 at the minute. So but you never know actually. I mean, in terms of, let's say we get a little bit of a retrace, and then it comes back up, this 200 day moving average could be around this level. So that'd be interesting to see at the end of the week, maybe next week, if it starts to retrace and we don't get up there. Also, another thing you might want to have a look out for, we are making clear lower highs here. Just draw this trend line there. We are making lower highs and we are testing this level at the minute, this trend line resistance. So it has, if we're going to get to that 0% line at 1.3485, that 200 day moving average, then we've got to break this trend line resistance. It's as clear as that really. But very, very technical chart, Euro. You can't get much more technical than that. It's been playing out very, very nicely indeed. Okay, let's have a look at cable. Let's start with a weekly chart. What do we have in this weekly chart? Spoken about it many times before. This lovely sort of symmetrical triangle that we've got here on cable. It's very, very technical indeed. You can see that we're starting to it looks like it wants to come up and test this top line resistance at around the 167.32. So make it easy, let's make it 167.50. I like the round numbers. But you can see around here, to the left, we have not had many, well, we haven't had any weekly candlestick closes above this level. So you can see around here is a nice sort of shooting star there, and over here, and also around here. It's a very, very key level that if we are going to get a big pop up in the next week or two or three, that's a huge resistance level that many people will be looking out for. But it's been playing out very, very nicely. Lovely trend line support, bouncing up, and we've now broken above all the moving averages now. So the odds are still towards the upside. If we get any retracement, then the 55-week moving average will be the first key support in terms of the weekly. But also on the in terms of Fibonacci levels on the weekly, we had a lovely reaction. We can see it a bit clearer on the monthly actually. If you zoom into the monthly, look at this clear, I'll just zoom out of it, very clear action, very like Euro as well, around this 50% level. I'll just highlight that for you. Around this area here, amount of candlesticks that pierced below, and also did over here as well, but around this level was pierced below the 50%, bounced up. So 1.5483 was such a nice level. So this fib play is still in play. Fib move is still in play. So the odds are that we're going to get up to that 0% line, which is around that 167.50. So that's the weekly perspective. You have to say it's towards the upside. Last week's candle very, very bullish. It is retracing a little bit at the minute. That is expected. I mean, do expect some sort of retracement. The odds would be, I mean, we've had two very bullish weekly candles, so this week we're already starting to get a bit of a retracement, but don't be surprised if it pops back up. But let's have, in terms of this week, let's zoom in on the other charts and let's see what we have. In fact, I know it's very, well, you can see around the moving averages here in terms of the daily. I'm going to flick it to the 4 hours for a bit more detail this week. But in terms of moving averages, we're pretty much cleared above all of them on the daily now. So, I mean, the odds are for some sort of retracement. down towards this 55-day moving average. That'll be a lot of people will be looking out for, and a lot of people will be buying dips. I'm pretty much assured that they'll be buying dips at that 55-day moving average, but we're still a long way away from there. In terms of fibs on the daily, the recent swing would be here. So anyone buying dips short term will be looking at this recent swing here. And well, the first 50% level is at 1 spot 60 59. Let's say 1 spot 60 60. So let's move to the 4 hour, and what do we have here? As you can see, we have, which is starting to get broken out, we have this very nice trend line, which in fact is pretty much just got broken as we speak. This was reacting very, very nicely, as you can see around here. Good. Need to get used to drawing these circles. There we go. So we had a very nice bounce there. Well, we had one bounce down here, one around there, another bounce there, and now we look like we are breaking. Well, we pretty much we have had a 4 hour close below the trend line. So in terms of the odds are looking like it wants to come down to this 4 hour 55 moving average, but a healthy retracement will be down to this 50% level. In terms of the daily, yeah, I mean the moving averages are a long way away, so I wouldn't be surprised if we came down and tested this 88.6 level, the 78.6 level. That's where the 55-day moving average will be if we get any significant sell-off over the next couple of days. But in terms of a very shorter outlook on cable, the bias is still towards the upside, so a lot of people will be looking to buy dips, but this trend line has now broken. So the higher odds play would be to look for some sort of healthy retracement and then buy on the dip. A lot of people will be having this fib up on their charts because it's a very clear fib on the 4 hour. I mean, on this 4 hour chart, it is literally the low of the chart to the high of the chart. So that 50% level will be very interesting to see how it reacts going into the week. Okay, that's cable done. Let's have a look at dollar yen. So what do we have on dollar yen? In terms of the weekly, nothing really of much interest. Really not a lot of interest at all. I mean, all it is really is pretty much in between the 55 and the 100 week moving average. Not a lot to talk about. Let's flip it to the daily. What do we have on the daily? Much more interesting chart. This recent fib move is what it's all about. We have broken below the 55-day moving average and the 50% level. And now you can see we are now testing this 100-day moving average, so very key point of support. It's already bounced off it pretty much to the pip. That stands at 79.55. I mean, we spoke about the last sort of few weeks videos that we were due some sort of retracement. When we were pretty much up here, so we've had such a strong move. 1, 2, 3, 4, 5, 6, 7 weekly candles, all bullish, pretty much in a row. You have to be expecting some sort of retracement. And in fact, no, there is an interesting level on the weekly, and that's the 55-week moving average, which kind of coincides with the 61.8% level. But it looks like we're already getting bought before that at this 100-day moving average. So key point to look out for there. A lot of people will already be buying the dips. The thing that I'd be looking out for is what the daily candlestick close looks like. If it's a nice hammer, then that's a very good buying opportunity, in my opinion. The best thing to do would be to look for some sort of reversal signal. But no, quite an interesting chart there, dollar yen. It's all about that fib move for me. Nothing really else of interest in terms of dollar yen apart from this big fib play, which is it's a very obvious fib to look at, and those ones normally work the best. Okay, let's have a look at Aussie dollar US. We haven't spoken about this in a while, so I thought we'd do this one today. In terms of the weekly, very strong uptrend on Aussie dollar. We did have the RBA come out yesterday. Actually, let's have a look. This was overnight, I think. Yes, we had they cut interest rates. They slashed them from 4% down to 3.75%. Very interesting that for Aussie dollars. We always have a lot of long-term investors put their cash into Australian dollars because of the fantastic interest rate. Now that they've cut rates, we could see some big sell-off. So we are getting very near this trendline support on the weekly now, so it'll be very key to see how that reacts. You can see the 55-week moving average is capping as well very nicely there at the 1.0455 level. The next support on the weekly will be this 100-week moving average, but that's if it breaks the trend line. And if you move the trend line out a bit, so it's a cleaner one off the lows, then it pretty much comes into the pip there. So that would be a very nice confluence zone of support there if we do get down to that level. In terms of the daily, what do we have? Moving averages, we're pretty much, well, we're very below the 200-day now, so the candlestick close will be very important on that one. In terms of the fibs that I'd be looking at, because you have to have this trend line on here in my opinion, as it coincided so well with that 100-week moving average. But if you want to bring the trend line in, I think it is pretty much testing. No, it's not quite testing. No, I'd leave it clean around there. In terms of the fib moves, in terms of a bigger fib play, the low here to the high, the 50% level may coincide with this trendline support if we get a further sell-off. That would be a very big level of support though, regardless if it's near the trendline or not, because it's a very clear and obvious fib there. In terms of the recent swing fib, sort of more of a shorter outlook from this low here to the high, we did have a nice bounce of this 61.8% level around here. We've started to go, but you can see it's starting to struggle. We got caught there at the 100-day moving average. It did make a candlestick close, but now it seems to struggle below that. So this 61.8 would be the key level that I'll be looking out for going into the next sort of few days for the rest of the week. This, you can see it reacted so well, I mean pretty much to the pip on that candle there. So the main level I'll be looking out for this week for any more buying opportunities. And you have to say, I mean, with the interest rate in terms of fundamentals, not that I like to talk about fundamentals on there, with a 3.75% interest rate, a lot of people will still be putting their money into Australian dollars if we get a nice sort of retracement. But you get very good buying opportunity. I'm very sure that a lot of people will be buying at that 1.0240 level. So that'll be a key level that I'd definitely look out for on the charts this week in terms of the Aussie dollar. Okay, that's done for the Forex. Let's have a look at gold. Everyone's favourite shiny metal. We've spoken about a million times before this trendline support on gold on the weekly. Still holding nicely. The 55-week moving average is still holding well. We had a nice weekly candlestick close above that trend line last week. So yeah, it looks like people are still buying on the dips, as we've said many times on this video. In terms of the recent fib move, zoom in a bit more so it's much clearer. You can see this 61.8% level holding very nicely indeed. Let's just highlight that for you. So a lot of buyers coming in at around this 61.8% level at 1624, and we're now up to just shy of 1660. You can see very key last week that we had this candlestick close. I'll just highlight that for you. Very key with this candlestick body close above this 50% level, so now above the 1656 fib, and you can see that this week we've already pierced below and we've now bounced back up. So very bullish price action there on gold. In terms of the resistance, all I'd really be interested in are these highs at the 1790 level in terms of the weekly. Is there anything more interesting on the daily? In terms of that fib, I'll still leave the same one on here. You can see it has some lovely action there around this trendline support and the 618 level. The very key confluence around this little level here. But you can see that we are getting capped at this 100-day moving average, the purple line here. Just highlight this for you. You can see very nice action there. Once there, twice, 3 times there. We are capping at this 100 days. So if we are going to get any more momentum to the upside, then we have to break above that 100-day moving average. But no, gold's very nice chart, very technical indeed. Okay, that's done for the charts. Let's have a look at the Forex calendar and see what we've got coming out for the rest of the week. So today we already had some some weak UK manufacturing PMI data. Forecast was 51.4, it came out at 50.5. That's why we're seeing that retracement in cable already. The big news out for the day though, the only big news out for the rest of the day, is the US ISM manufacturing PMI data. That's forecast at 53.0, previously was 53.4. And tomorrow, for any of you that trade the Swissy, we have Swiss retail sales year on year, forecast at 1.2%, previously 0.8%. We have some more UK data out tomorrow. The UK construction PMI numbers forecast at 54.2, previously was 56.7, so we're expecting a contraction there. Wednesday we have the ADP non farm employment change numbers, very big bit of data. Forecast at 179,000, previously was 209,000. Everyone's saying that the numbers need to be above 200,000, so we're expecting a big drop there. Not good for the US economy at all, that, especially we had those weak US GDP numbers out last Friday as well. So there's a bit more uncertainty out in the US at the minute, after having all that optimism with the good NFP numbers. On Thursday with the UK services PMI data forecast at 54.6, previously 55.3. At 12:45 UK time we have the ECB minimum bid rate, forecast to stay the same at 1%. On that, what follows that is the ECB press conference. What will Draghi be talking about then? Will he be hawkish? Will he be dovish? Talks about the LTRO as well. On Thursday, the weekly at 1:30, we have the what's going on there? We have the US weekly jobless claims numbers forecast at 382,000, previously was 388,000. We also have the ISM non-manufacturing PMI data at 3 o'clock, forecast at 55.5, previously 56. So another contraction there we're expecting. On Friday, if you're up at 2:30 AM UK time, we have the the RBA monetary policy statement. What will they be saying after they cut rates last night? That'd be interesting. But the key bit of data out on Friday is the US non-farm employment change numbers, forecast at 176,000 after last month's awful 120,000 numbers. Especially, it's a very interesting number that was, a terrible number. But now, especially after that number, everyone's talking about QE. Is there going to be any more QE? That's why we've had a very, very weak dollar recently, because, I mean, poor data means weak US dollar, and it also means is there going to be more QE, which weakens the dollar even further. That's why we're seeing such a bullish euro against the dollar, and we're seeing a very bullish cable as well. And at the same time, we have the US unemployment rate, so that's forecast at 8.2%. Okay, that's all for today. Hope you've enjoyed this video. Hope you learned a lot from the technical analysis. Keep it tight, stay safe, and I'll see you next week. Have a great week trading.